Hi friends, this is John Kingston from JR Trading Zone. In this video, I am just going to give some points about the investment techniques. I am a trader, but I always ask everyone to be invested in Indian stock market. If you believe that our economy is going to develop in the future, or our economy will surely go in the upward direction, then you should be invested in some companies. Then how to invest? There are always three type of investments. One, the safe investment. We invest in established company, debt free company, that is called less risky investment. The second one is value investment. The company might have the potential to grow to a big extent. Identifying such stocks, identifying such sectors, and investing in that particular stock will give a great return in the future. That is called value investing. The next and last one is risky investments. Okay, they may be penny stocks, there may be somewhat risk elements in their stock, but you think even though if there is risk in the stock, it might have the potential to improve and it has the potential to give great returns in the future. The company might develop in the future. Okay, these are the three types of investment. One, the safe investment, where you are investing only in the most prominent companies, debt-free companies, Nifty 50 companies, the top blue chip stocks. Okay. Second type of investment, the value investment. This is the most important section where you identify the stocks, identify the sector which is going to grow, and you invest in that stocks. The last one is risky investment, that is investing in penny stocks which has debts, but you think it will become a good company in the future. Now it is not working well, but there are many possibilities for the company to work well in the future, and that might give a multi-bagger return. Then how to invest? How many percentage you can invest in these different bags? The first investment, safe investment, I always recommend everyone. I am not a SEBI registered analyst. I don't recommend any stocks, but I will tell you one thing. In blue chip stocks and Nifty 50 stocks, you have to invest 50 to 60% of your total corpus. Okay, the next 25 to 30% or 40%, you have to identify the valuable stocks which has a great future and the sector is going to be a great, what we say, boom in the future. In that sector, in that stocks, you have to identify and invest more than 30 to 40%. Remaining 10% or 15%, you can invest in high risk stocks. Okay, see, I am just talking about directly investing in equity market. Okay, this is the simplest investment method. Knowing the derivative market and investing in equity market along with hedging in derivative market is completely a different subject. I am just explaining the simple method, simple procedure of investing in the equity market, in the cash market. You go and buying stocks for the cash and you keep it in your demat account. Okay, this is the simplest form of investing in the equity market. Now, how to find that our company is performing well? How to identify the stocks? You have planned to buy some stocks in some sectors, then how can you know the company is performing well? How can you know the balance sheet of the company? How can you know the fundamentals of the company? This is very important. No, if you are investing, if you are trading, you don't want to know the fundamentals of the company. You just want to know the technicals of the company. Technical analysis, you should know the technical analysis, where the stock is, how much the stock can move, from how much the stock is going to fall. These are the parameters for a trader. For an investor, this is not a parameter. Knowing technical analysis is an extra benefit for him. in which levels to buy, how to buy, where to buy. This is an extra benefit for an investor, for a long-term investor. Even though if he is not knowing the technical analysis, knowing the fundamentals is very important. From where we can identify, how can we know the importance, the growth of the company, how we can identify the debt, and what we say, the plan and everything of the company. This we are going to see in a very simple software. That is what I am going to show in this computer. Okay, from my computer presentation you can know how to analyze a stock, how can analyze the fundamentals of the stock. After that I will be back. Hi friends, let's start with the presentation. This is the software screener.in which we have to open. You see, this is a very simple presentation, but you have to watch carefully and work it on. Okay, you just open screener.in. Now right side in this place you have to search a company. For example, Tata Motors. You see, you can see the complete details of Tata Motors. It is market cap is 1,86,823 crores. The current price is 521. The high and low of the year, 537 was the high, 375 was the low of this year. Stock is trading in a P ratio of 74.5. The book value is 136. Dividend yield is 0%. ROC, return on capital investment, that is 6.31. Returns on equity is 5.58. Face value is 2. Promoter holding is 46.4. Enterprise value, return on assets. You can add a lot of parameters here in this column and find everything. This is, you see, ROE previous year, net cash flow, debt to equity. For each and every equity share, the debt of the company is 2.96 rupees. What is the net profit? Industry PE. Industry PE is 68.6, where the PE of Tata Motors is more, 74.5 than the industrial PE. Then change in the promotion holding. Then you can see the debt, dividend yield, debt before 3 years, 5 years, Petrosky score. I am not going to explain you each and every terms here because it will be a very lengthy video. You should dissect, you should try to understand these terms which I have referred. You can add any type of you see here, you can go and edit the ratios. You can give any type of parameters, you can add any type of parameters here, and you can find all here all the parameters in one click. Then you can go down, you can scroll down, you can get the chart here. Then you can go here, what are the pros and cons of the stock. Here the pros and cons of the stock will be given. Then the next one, the peer comparison. If you are selecting Tata Motors, here you can get the comparison with peer companies. You see Ashok Leyland, Tata Motor Drive, Octilia Generic, Force Motors, SML. You can get a comparison. Comparing this, you can have a better idea. You can take a better idea which stock is good, how it is performing, what is the current debt, what was the debt before 3 years, 5 years, whether the company is in a growth phase or it is in a sideways or the company is going down. Everything you can understand from this results here. Then you can get the quarterly results on the next section. Opening profit, closing profit, profit after tax, then profit and loss statement is here, the growth of the company. Then you can go get the balance sheet. See here you can get the cash flows, then different type of ratios, shareholding pattern, how much the promoters are holding, how much FIIs have invested in this company, how much DIAs has invested in this company, how much government has invested, what is the public investment in this company in year 20, June 2020, September 20, December 20, March 20, each and every quarterly, how the promoters holding, FII holdings, DIA holdings are changing. Did they increase their holding? Did they decrease their holdings? Are they moving out of the stock? Everything you can find it. Then you can get the annual returns, annual reports here, year 22, 21, 20, 19, each and every annual report you can get here. Even if you are not able to know or read the annual report, it is not a great thing, because annual report may consist 1000 pages. It is not important to read all the even if you are getting this values, you can get a clear cut idea how the company is performing, and you can make a decent comparison here. That is the big plus point. You can make a decent comparison with the peer companies. You see, for example, TCS, Tata Consultancy Company. I'm just going to go Tata. You see, market cap is 12,14,897. The market cap is 12,14,897. The current price is 3320. The high was 3575. The low was 2926 this year. This year's high and low is given. The stock PE is 28. The industrial PE is 25, more or less near, no problem. Book value is 247. Dividend yield, ROE, ROC, face value, promoters holding. You see, promoter has a strong holding. He has kept 72.3% holdings in his share, which shows the company is very strong. Okay, he believes, the promoter believes in the company, because of therefore he is not decreasing his holdings. Okay, then return on assets, ROE previous year, net cash flow, debt to equity. Debt to equity means for one equity share, the debt is 0.09. More or less, it is a debt-free company, we can say. The net profit, then quarterly profit, debt before 3 years, debt before 5 years, the Petrosky score. I will make a few videos on this, some elements. Okay, Petrosky score, ROC, ROE. One means I will make a short video, but in this video I am not going to explain everything. Then you can make you can know the pros and cons of the company. Is almost debt free. So I told you, you see, more or less it was debt free. I told the company is almost debt free. The company has good returns on equity. ROE track record 3 years. ROE is 43.3%. It has given 43.3% over the past 3 years. Company has been maintaining a healthy dividend payout of 61.4%. Company's working capital requirements have reduced from 43.6 days to 32.8 days. What are the cons? Stock is trading 13.4 times of its book value. That is the only cons which we have to tell about this company. Then you can make a mere comparison with the peer companies. Here TCS is there. Then you can go to InfoShares, HCL Technology, Wipro, LIT, Mindtree, Tech Mahindra. These are the peer companies which are competing with TCS. So you can make a detailed comparison how this company is working, how that company is working, what is the profit of that company, what is the loss of this company, how which is the debt-free company, how the company's growth is, in which way the company is growing, what is the percentage of growth rate, who is the administrator of these companies, how the company will perform in the future, what are their plans, everything they will give in the annual reports. Just come into the screener and take all the values, short your, what do you say, portfolio, may create a portfolio, create a diversified portfolio. If you are investing in one sector, one electrical sector, then you have to invest one in computer sector, what we say IT sector, then one in banking sector. Like that, you should have a diversified investment. Always maintain a diversified portfolio. If you are having a part investment in IT sector, the next one should be in motor vehicle sector, next one in what we say FMCG sector, then one in some other sector, real estate. Like that, you can have a diversified what we say, you can create a diversified portfolio, and you can keep on investing in that diversified portfolio. If you are able to understand the technical analysis also, you can make much more, what we say, better investments. Okay, you can invest in the right place. For investing in the right place, you should know that technical analysis. Even if you are not aware of the technical analysis, a long-term investor should just create a diversified portfolio and know the fundamentals and basics of the company. And if you believe that the company is going to perform well in the long run, and if the sector is going to perform the long run, you can keep on investing in those sectors. In this video, I want to show how we can understand the profit loss and the company and how the company is performing. Everything we can understand from this simple software screener.in. It is free. Actually, it is free of cost. Everyone can study how the company is performing. I think you got a good idea from this video, and if you are an investor, use this software. Okay friends, I think you enjoyed watching this video. This is how people identify the basics of the company. Now, knowing the basics of the company, knowing how the stock is performing, what is the high, what is the low, what is the technicals of the stock, and everything, investing in a company is very safe. Always, if you believe that Indian economy will develop in the future and Indian economy is having an upward moment, then you can directly invest in the stock. Selecting the stock and selecting the sector which is going to develop, everything is in your hand. You have to do a great analysis, and each and every sector you have to add in a portfolio. You should have a diversified investment in your portfolio. I hope you all enjoyed watching this video. I will come with a new subject in the next video. Till then, this is John Kingston signing off from JR Trading Zone. Bye.